Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, December 18th, DT strategies for the upcoming week. A reasonably short video that we do for our YouTube and Twitter subscribers and for our Traders News and resource members from our dynamictraders.com site. I've changed our opening page a little bit. I hope you like it. I'm going to play around with this until we settle on the right format. But if you like what you learn here today, and we're going to go over more markets than we typically do in these YouTube reports. I'm going to do them really fast, though. But if you like what you learn, check out our DT reports at dynamictraders.com, where every day we update stock indexes, Forex, Bitcoins, gold, silver, bonds, notes, ETFs, futures, etc. All markets, all time frames. And part of our focus is to teach you about trading and how to trade. And whether you follow the markets that we have in any particular video or not, you can learn how to look at the market, analyze the market, understand the position of the market, and identify specific high probability trade setups. So our purpose is for you to learn to trade all markets and all time frames. So once again, we're going to look at more than just one or two markets today. We're going to go through them kind of quickly, but there's probably some real setups, good setups coming up in this coming week. So this is also the last video that I'm going to do this year for YouTube and Twitter subscribers because of the holidays coming up at the end of December. So let's get at it. Well, this is Euro daily data. I just want to review it real quick because in the past week or so, I've been featuring the Euro as a possible weekly low and a setup on the long side. In fact, we had a specific trade setup here that got initiated on the 8th, about a week or so ago, when it made a close above this closing high. And that was a potential having completed a corrective decline, which would be followed by a weekly bull trend. Well, trading is about identifying conditions with a high probability outcome and acceptable capital exposure, because sometimes a trade doesn't go the way that we think it's going to go. So this was a great setup on the long side, and then, however, 4 days later stopped out when we made the close below this closing low. So this chart has been updated. This is still a potential correction, but it's looking less and less like that's the case. And in fact, after Friday's decline, if we just trade below last week's low, which is Wednesday's low, that voids any bullish setup. So right now, the only way this would be a legitimate bullish setup is to make a new recent closing high and then have some follow through. But right now, it looks like it's turning around. So again, it was a great setup technically about a week and a half ago on this new closing high that was made on the 8th, but then the market had zero follow through, came down, then closed below this closing low to stop out. Pretty small capital exposure, pretty small loss for the potential of a weekly bull trend. So we've updated this in detail in our regular reports for our DT subscribers and shown the two alternate positions and the triggers that either bullish or bearish. I featured notes and bonds last week. Let's do a quick update because it's now just coming into the position for the setup that we talked about last week. So this is notes, futures data, close only, the daily closing data. And as of Friday, notes closed right into the closing range for an ABC correction. So they're at or very near completing a corrective high. The daily momentums are bullish just below the overbought zone. The next bearish reversal will put the daily momentums in sync with the bearish weekly momentums to complete a correction. Bonds are in the same position. This is bonds. This is not closing data. This is the daily range data. Above the market at 163.14 to 163.23 is the ideal end of wave C target zone. But simply if bonds were to turn around and just close below 162.15, that would indicate this correction is complete. And if notes, I'll go back, notes closed above the December 13th wave A closing high at 130.27, it would indicate that correction is complete. What's significant about this, just as I explained last week, and you get more details in last week's video, is that notes and bonds are in very close to continuing a bear trend that's going to last, probably going to last for weeks, if not months. So before we continue on and look at a couple of more markets, check out our DT reports at dynamictraders.com if you want to keep up to date almost daily on all of these markets. And if you haven't joined our DT Traders News yet, join that. It's at dynamictraders.com. Click on the Traders News tab. Sign up for that. We don't ask for any credit card or anything like that, just your email address so we can let you know when we put updates. So this is gold weekly data, and we feature gold on and off for many months. And recently, as you know, we've been looking for a probable weekly low to be complete and possibly monthly low in December, particularly the second half of December. So the weeks ending this past week, December 17th, through the last week in the month, had all the key weekly time factors to either complete an intra-week low or a weekly low close. Well, what happened this past week? This is called an outside week 3 close bull reversal. That's where it made an outside week. It was actually a double outside week because it was outside the weekly range of the past 2 weeks, and then it closed above the weekly closes of the past 3 weeks. That's a pretty powerful reversal signal, particularly when the weekly momentums had reached oversold. So more than likely, we've completed a weekly low, if not a monthly low. That's significant. This is the daily data, and what we're looking at is we've probably completed that low. Trading-wise, as we take a strategy from W.D. Gann, who taught to safest time to place a trade is on the initial reaction to a new trend. Well, more than likely, the new trend began this past week. So what we basically look at is the next cycle in the daily momentum to make a bull reversal. That's probably several days away, if not even the end of this coming week, if not the following week. But that'll be the setup, the initial correction. In Elliott Wave terms, we call it a wave 2 or B correction against the new trend to position on the long side. And we want to get really good at identifying corrections, because what follows a correction, every market, every time frame? Well, it's a correction, so a resumption of the trend prior to the correction to a new extreme. So we've got total focus right now. The total focus is on probably several days ahead, if not a week or so, and the next cycle in the daily momentum for the bull reversal to complete that weekly low and confirm the weekly low and continue the bull trend. That's what we're going to be focusing on in the days ahead. Let's take a quick look at the S&P. This is the weekly data. So for the SPX, the cash index, the weekly 8 momentum made a bull reversal. That's significant. That means probably within a week, 2 weeks at the most, the bull trend will resume, probably to a new extreme, a new high. And probably more sooner than later. Here's the daily data. Now here's what's significant, and here's a real lesson learned for this past week that I want to run by you. This is Wednesday. That was the Fed announcement day that had that huge up day and then closing at the high of the day. But then what happened the next day? Reversed right back down, gave back the majority of what was gained the day before. This is a news panic day with no follow-through. And so what I do when I'm looking at pattern, position, and trend of the market, ignore that day, because that day did not really affect the trend of the market. The short-term trend was on the downside. It had not completed a correction yet. And what's happened the 2 days following Wednesday? Well, we're at a new low. So we're getting in a position to complete the correction against this initial advance and complete it by this Wednesday, which is the low to low to low, and Monday, of course, is Tuesday is the summer solstice. I guess the 23rd is actually Thursday. So sometime between Tuesday and Thursday, we should complete the daily momentum bull reversals, which will be in alignment with the weekly momentum bull, and complete this correction followed by a continued advance. So you can look at this also, if you want to look at the range days, you can look at it as an ABC irregular correction or an expanding ABC, however you want to look at it, but it's a correction, more than likely at least, within a weekly bull trend, and the correction should be complete this coming week. So this is a lesson learned, because particularly recently we've had so many of these panic in and out days because of some news event, and then the next day it gives most of it back, and it really is not a good technical signal, and it doesn't interfere with what was the trend of the market prior to this panic news day. So keep that in mind in the future, because we're going to have probably a lot more days like this in the months and weeks ahead. So that's it for today. I hope you found this useful. Again, check out our DT Traders News membership. Go to dynamictraders.com, sign up for it, get some extra updates and some extra information from us completely free. I hope you have a fantastic holiday season, and get some R&R. We're going to take a week off between Christmas and New Year's, and then be back the first of the year with our regular schedules. Robert Miner, over and out.